Let's go.
Next, we are going to talk about chasing scale. Achieving scale and standing out in a prop tech world, not always easy. So joining us for the conversation is the Senior VP of Digital Strategy and Transformation at CBRE. So please welcome to the stage, Sohin Chinoy.
Awesome. All right, can you guys hear me okay? Coming through loud enough? All right, well, really excited to be here, and thanks for having me. So this is the morning of the second day after folks went out the night before. And for those of you who've come in and not decided to sleep in a bit, this provides us an opportunity to kind of do things a little bit differently than what I had originally planned to do, which is to make it much more interactive. This is the size that we can actually make it work. So what I'm hoping to do is talk about the topic of some of the do's and don'ts or best practices that we've come across, both the CBRE and also in my conversation with other strategics, of how prop tech companies can sort of stand out amongst the pack. And the idea is, this is the topic that I was asked to speak about, and from my understanding, virtually everybody in the room is either a budding entrepreneur, has been in the past, is today, or is an investor, and the like. And so I think there's elements of this that you guys will find relevant to your day-to-day lives. But what I'm hoping to do is sort of go through the slides relatively quickly, and then spend a good portion of time on just Q&A, because you may have some curiosities of how the likes of the CBRE would evaluate certain kinds of companies, or what we care about, or maybe even the areas of focus for innovation for us. So let's do that, and I'll promise to sort of keep the slides relatively straightforward, and we can sort of keep a dialogue. So let me start with the obvious, which is that there isn't really a single best answer, and that is not. Thank you. So much energy is spent on getting to the conversation that when you're in it, a lot of companies don't have very specific things that they would want to come out as next steps. So oftentimes when our team, for example, discusses the background, the history, the solution set itself, and next steps, we find that a lot of companies actually sort of leave what to do next in the hands of the strategic. How would you like us to move? Or, we're open to anything you guys want, which is a really good thing to be flexible. But one of the things that really helps to move the needle is a precise sense of where the strategic fits into the vision that you guys have as a prop tech company. And we would love to know that the train is there, we've got a ticket, it's moving in a certain direction, and that there's a marrying of operations and visioning. And so if you're leaving it all the time to the strategic, of course, then you might find folks talk about delays, or folks talk about adoption challenges and the like. So good thing to do is just really think through, okay, what do I want to have happen, right? And that's the obvious thing, but I would say probably 30 to 40% of the time at minimum, sometimes depending on the area, the theme, maybe 60% of the companies that we talk to don't have that really well crystallized, right? Okay, if you go to the next one. Okay. Okay, build a kit approach is the other one, right? And so one of the things that's really important to understand is sort of how scale actually happens in a real estate context, right? So this industry is quite different in terms of what scale means in many other sectors outside of real estate. So many times the solution that we're talking about, hardware or software, has to be deployed, tested and deployed at the individual building level. And so talking to a large player like a CBRE, for example, is a really good way to at least get exposure, and not just CBRE, to all the other strategics in the industry. But of course, it's not a push button thing where somebody does the math and says, well, you have a few billion square feet, and so just automatically deploy this to a 10% of that. It has to be, oftentimes the decision makers are in the field, within the strategics, or are on the client side, like asset managers and the like. And what I've seen is starting to come up more and more, but wasn't the case like 3 years ago, is a kit approach where you're allowing for a sort of a building-specific, almost unit consumption with very little technology hurdles to cross. So what you want to be able to do is make it really easy for a whole bunch of demand hands to be raised out in the market without something centralized pushing the scale for you on your behalf. So the kit approach is really important, just in the same way that typical Silicon Valley companies that are delivering products think about the notion of kitting, right? Another one I quickly go through, there's about 10 more of these, obsess about user experience. And this seems relatively obvious, but what I find very often is that a very, very good user experience beats out technical sophistication all day. Because where it's being adopted, there isn't a massive technical sophistication to begin with in the field, in real estate. And it's changing, right, as we all know, but it's not super there. And what a lot of people do is to define the product and all of that, they go along to ride along, they try to understand the problem set, they try to customize their application as much as they can to what they assume is the problem set. But what very few companies do, what the best do, is actually validate whether or not that new workflow or the new sort of way in which a process could work is in fact going to be right. So the proof before you start delivering something as a second go around doesn't often happen. So obsess about customer experience. So, and we're noticing that the kinds of companies that get relatively higher levels of investment, one of the things that they have in common is that it's a seamless customer experience. And you would think that that's across the board, but probably a good 50% of the companies. The solution is there, but the time and energy and the clunkiness is one that would limit those that are not super technically inclined to begin with. So try to focus on that, all else equal. One of the things that we're finding happening more and more now that, again, didn't used to happen as much 3 years ago, and there's about 700 companies born every year in this space, right? So a lot of data points to process this with, is an integration with other solution providers. So rather than sort of going in the, hey, I'll do it myself approach, companies are now starting to realize that let's go after the bigger problem set and let's figure out a way in which not only do we have integrations with sort of passive integrations, if you will, we can work with whatever other software you have. Those kinds of stories come out. And actually going to market with a joint solution. That is something that's relatively new across multiple different themes in real estate. And we think that's probably going to be the kinds of companies that take a lot of traction in the future because it simultaneously solves for a lot of different niche implementation challenges altogether. So think outside of kind of what the particular company is that you guys might be representing. And if it's on an investor base, the folks in the audience, it would be a good idea to try to ensure that at least one swim lane of thinking, if you will, from an operational planning standpoint for the company that's in your portfolio is thinking about how best can integrate with others that are adjacent but not competing. Okay, quickly going to touch upon this. This seems relatively obvious as well. We're seeing a huge amount of well-intentioned but niche needs, and this is something that's not just real estate specific, but all else equal, if you're this for the audience members that are thinking about doing something, aim at the really high friction needs, because when you have a singular almost a serialized path for success where A has to happen before B can happen, B has to happen before C can happen. It just makes it that much harder to scale. Another thing that makes sense to kind of talk about is just realistic expectations about what it means to scale, right? And a lot of times we have found companies that are really good at what they do, right? The idea is brilliant. A lot of brilliant people out there in general. But to implement it, particularly at a publicly traded company, there are a lot of other things that usually don't show up in the startup world, right? So there's a lot of governance, there's compliance, and there's change management and adoption and awareness that has to happen. And all of that takes time and energy. And also, oftentimes, the parties, even within a central sort of corporate structure, like somebody in corporate that you're talking with, or somebody even at a division level, will have to advocate for that company on behalf of them, right? So within the larger infrastructure. So, and that happens successfully all the time. But one of the things to sort of go into it with is having the right kind of planning to absorb the amount of time it takes for decisions to be made and for the scale to actually be realized. And when it can happen well, it can happen quickly, but it's one of those, typically in large companies, it's a slow, and then there's potential for hockey stick. But that upfront period is probably 10x longer than it takes for startups to kind of really get independently, right? So, but that scale is much larger. So realistic expectations. And one of the other things here also is that, you know, people, and we're starting to see this a lot more globally, is if you were to take any kind of prop tech category, right, there's at least 10 other people doing this somewhere globally, right? That's what we're seeing just about all the time. And so have realistic expectations about kind of the time it takes for these strategics to look at the entire field, which sort of leads into this other thing, which is maintaining a value-oriented approach. So it's clear that, you know, to be able to gain scale, that strategics play a substantial role, property owners play a huge role, and the like, right? Most of the time, I would say probably a good 60% of the time, even the best ideas and the best founding teams struggle to articulate what the value is that they would bring beyond some conceptual level to the party that they're talking to. So we can help you save this or save that at a very high level, but it's usually not grounded enough because of the amount of research that's gone into it to make it super actionable. So if you can maintain that value-oriented approach, I think that helps. So effectively what that means is in your conversations, you're almost trying to write the business case on behalf of the person that you're speaking with, particularly if they're a decision-making authority within the central management team, right? So help to write the business case, think through what the ROI would be and the timing and the risk that the strategic or property owners would have to go through. Limited data dependency on third parties. I want to spend a ton of time here, but one of the things that people do think about a lot is whether or not there's going to be a single point of failure. And so, and this happens a lot, where when you get into it, the third, the fourth, the fifth sort of level of a round of discussions, almost always you find that there is at least some level of dependency on some third-party data source or some sort of a process to happen and so forth. And so a lot of times the strategics look for that. Like in my team, we specifically look for those kinds of things. And anytime that you can sort of articulate it up front saves everybody a lot of time. And in general, move away from that, because obviously the industry's seen a lot of areas where there's only one or two providers for a service, and that's an area that in general, like I can certainly speak for the service, real estate service providers like CBRE, we try to avoid those as we can because they turn into bigger problems down the road. Pricing the solution to minimize adoption hurdles. So I'll give you an example, right? We talk to data companies, and somebody's gathering a whole bunch of data. It's really good. It saves us, in theory, a ton of time by not having to go at a given property level to find that same amount of information in public ways ourselves. But when the time comes to, when we ask, okay, how do we consume this stuff, right? Well, we have to go build an API, and that's going to cost a bunch of money and so forth, right? And oftentimes, the budget doesn't allow for that, right? On the end of the startup or the prop tech company. So think about, all of this in your financial planning to the point where, make it as easy as possible to actually test the thing out and to adopt. And again, recognize that there is a global set of solutions that are out there, and a lot of times we see companies that are at least somewhat aware of competition, but only in the US. So, and the likes of Europe, Israel, all over APAC, there's a lot of solutions that are coming out that have a different unit price structure. So think about how do you make it easy for actual testing, right, and adoption. And one of the kinds of questions that you should expect to see is there a bow wave effect that's about to happen where after the initial testing is done, and let's say there's some level of mutual agreement that this is a good thing to try to implement, that there's going to be a 10x price increase afterwards, right? We try to see that coming from a mile away, and we try to avoid. So one of the common things that we see often, unfortunately, still. We talked a little bit about competition and demonstrate differentiators. A lot of people, there's only so much sort of features and functionality level comparative assessment that one can do because you're still trying to move your product forward. And so that makes a lot of sense. A lot of companies are aware of what their competitors are doing at some level. They think they are the best in class, but they don't know that they're the best in class. And anything you can do to demonstrate how you know that you're the best in class, and it doesn't, by the way, have to be true across the board. So you may simply have the lowest unit cost to adopt solution, which has a fraction of the functionalities as the high end of the market, but at least you understand where you stand and you're articulating for that value directly. That's something that's helpful to know. Respect unwritten engagement rules. We see this all the time where, again, scaling is very, very difficult. And what a lot of startups do is they'll talk to any willing person to lend an ear. So we'll have scenarios where the corporate side of the organization, let's say at CBRE, would have talked to a startup, and we realized that they're also somewhere in the process of talking to 50 other people within the company to kind of spray in every direction in hopes that there's going to be somebody that sort of picks it up and runs with it. And to some degree, that's not a terrible, bad idea. It's a good thing to just make aware of folks in your solution. But on the other hand, a lot of that then just turns into spam at the company effectively, right? So if there's a lot of people involved in the conversation one way or the other, those kinds of things tend to not move super quickly because there's a lot of opinions along the way as well. So just think about sort of how do you want to engage with the organization, at what level, and how frequently, and the like, right? Small budget for customizations. This is important because the service providers, for example, one of the realities that we live with all the time is that every client, and these are all usually large clients, right, have some level of secret sauce that they want to put in that's just theirs, right? So we have an existing set of technologies that we already do business with, right? So anything that new that's coming in is going to be, has to be incremental to that, has to be accretive to that. And those technologies already have some small customizations built in. So have a budget for this in your financial plan. Expect that it's going to happen. And rarely do we just pick stuff up that is off the shelf in that sense, right? There's going to be some level of client-specific customization. So if you can do that with fast turnaround and low dollars, you're positioning yourself to be most readily acceptable, through a broader end client base for CBRE. Personal brand, I won't spend a ton of time on this, but you'd be surprised at how much energy, not CBRE is one, but as we talk to our equivalents at all of our competitors and many other strategics in the market overall, a lot of energy is put towards assessing personal brand and sort of headline risk, right? What's the likelihood that if we were to invest as a direct investment into a company, or there's some sort of, even as a second order investment into the company, or we pick up the solution so that the proptech company becomes a vendor partner, that there's going to be some kind of an issue where the founding team gets into some sort of a trouble, or there's some unethical decisions that are made and things like that. So remember that your personal brand really matters here. And the only sort of general best practice that I can share is that people that sort of think through what is the right sort of temperament and judgment makeup and so forth that the strategics would find risk management-wise comfortable are the ones that are usually able to connect the best within the strategic, right? And then lastly, just to be flexible with ideas from the client. So one of the things, if I can, for the areas at least that CBRE's made an investment, let's say, right? One of the common threads there has been the ability to, I would say not only the ability but the interest in really understanding the problem set. We'll spend the time to help you understand what the challenges are, but then the risk is on the innovators or the entrepreneur side to go create a solution that can work with that problem without guaranteed commitment thereafter, right? uh, because it's always, you got to see the thing to know whether this is something that can be picked up and scaled accordingly. And so if you're open to listening to the ideas from the client and then going about your solution development accordingly, that really goes a long way. And most of the time, the vast majority of the times, the inbound things that we get, and there's several hundred companies per year that we talk to, is of a flavor that hadn't really gone through the upfront vetting of what the challenges are, and what specifically are the must-haves and nice-to-haves in the solution up front from the end customers, from the alphas, if you can think about it that way. So that's it. So those are about sort of 10 to 15 ideas that we've seen as best practices. And what I thought we can do with just sort of the stock material done is just have a conversation amongst us in the room. Any questions or comments folks have, super helpful. Other things that you guys have seen outside of the material I just covered would be good for your other colleagues in the room to know. And I'm happy to sort of go into depth in any one of these areas if you'd like. Please, sir. As in for CBRE? Yeah, so, yes, but it does vary by line of business, and it also varies by geography, because the way in which we go to market is also different by geography. So for the transactional businesses we have, like brokerage, for example, either leasing brokerage, capital markets, or even valuations and things like that, oftentimes the kinds of things we're trying to solve for there is speed and best ability to convert at pitch, right? We're looking for workflow efficiencies and so forth in the field. However, comparatively, if we were, so what is that? So I'll give you a few examples to make it real, right? So transactional platforms, for example, that go after areas of the market that we don't traditionally cover within our brokerage structure is one area, right? Customized CRMs that are very, very mission specific to the kind of work that the field agent has to do is another. And there's many such areas that we look into. Experience services is important there. In the operating businesses, where we have longer-term leases and we're doing something to operate a building, or even if it's on the accounting side as opposed to the hard engineering side, there it's really about delivering cost efficiencies, as an example, to our clients, right? So and additional sorts of services. So growing the service base that we have, delivering the kinds of things that they expect ultimately from outsourced managers, like cost savings, like predictability of where there's likely to be a capital project need, and keeping the people that occupy the facilities happy. And so there's a lot of energy on experience services and the like. So, and then as these needs are sort of there for CBRE, again, to answer your question, we're launching different sort of businesses as we go along. So on the experience services side, we a while back have launched our experience services platform called Host, right? On the topic of alternative sorts of space utilizations, we've launched our HANA platform. So things like that. And in our third type of business, which is real estate investments, we have an investment management business and the like. There it's really about analytics and efficiency and placing capital. And so when to put in, how long to hold, and when to take out, right? Alongside with the rest of the stuff of still enabling people with the experiences and the like in building. So I think it kind of depends, yeah? Please. Yeah, good question. So for CBRE specifically, there's a lot of thought and a lot of people that get involved, right? So everybody does it a little bit differently, right? So in our case, we don't have a separate investment arm that invests in companies that then the operating side of the house has to either pick up or not pick up. Sometimes there's a little bit of friction there, but you gain speed. In our case, we're sort of integrated to begin with. So leadership from our market-facing lines of business, along with corporate, are sort of both involved with dual responsibility, technology side as well as the operational side, to bring forth sort of digital transformation. There's a digital strategy team that's part of the things that I focus on, where we manage our global digital strategy, come up with it, refresh it, manage the program that sets a direction for where we invest CapEx in the company, right? So it's kind of How it's managed is fairly well integrated for a big company in particular. How do we let the market know is the second part of your question, right? So a couple of different ways. One of it is, we try to have conversations like this, right, at the right kinds of forums where we know there's great-minded investors, entrepreneurs, or budding entrepreneurs, right, that we can kind of communicate what we care about. To the gentleman's question just before. Secondly, we have effectively channel partners that we work with to broadcast the message, right? So we are LPs in some funds. We've got many informal relationships with other, VCs, both traditional and niche. And then as we're having conversations directly with startups, we're also on a one-on-one basis explaining to them the kinds of things that we're looking for, and whatever their solution may be, what are the incremental one or two things that we may need, if that's the case, to make it really well niche fit with our world. So, and we have about a few hundred, probably 600 or 700 conversations a year on that. So. Thoughts or questions? No? Yes, sir. You mean within CBRE? Yeah, I mean, so the groups that are involved is a strategy team, there will be a corporate development team, and there'll be business leadership. Roughly speaking, those are the three types of entities that are involved. And obviously it depends on the size of the investment as well, right? So there's governance structures depending on the size of the investment. So more people or less people have to be involved to sign off on the investment. So it sort of depends on that sense, right? But generally speaking, there's executive management, there's business management, there's corporate development that help to execute the deal, and there's the strategy team that sort of articulates why it makes sense for our digital ambition. Yeah. Yes, sir. Singular dependencies, yeah. Yes. Yeah, I think from an infrastructure standpoint, there is not like 100 options that make sense either, right? So inevitably there's going to be some level of sort of assignment and trust, right, into those kinds of solution providers. What I'm talking about is a little bit more, slightly on a smaller, different scale, right? So if you're an analytics company that is super reliant on one source of data, otherwise you can't deliver your core product, which by the way happens all the time, that would be a singular point failure. If it's a large company like Amazon or AWS, right, specifically within Amazon or Azure, let's say, or something, through Microsoft, those are not super risky in that sense, right? A lot of things have to go wrong for that to be a failure point for your company in general. But another thing could be that you are, let's say, super reliant on certain processes to play out, or some kinds of a validation or calibration that you have to get in the market from a bunch of existing players. And if you don't get some kind of a calibration in a given process to make sure that your output is right, let's say, then that becomes a failure point, right? Or you're super reliant on only one type of hardware that you can work with and so forth. So those kinds of things do exist. People are, of course, aware, and the CEOs are very smart of these companies to try to avoid that. But it does happen, particularly the more niche the solution is, back to my point about trying to be a broader, hit the larger pain point. We do see that happening a lot. So that's what I meant when I said that. Some of the infrastructure stuff, I think it's fine. Okay, I think I'm out of time, but appreciate the Q&A, and I'm around afterwards if you guys have any more questions. Thank you.